Hello, Warriors, TGIF. Hi, Ingmar. How are you? No Bear. We start this time every day, Monday through Friday, top of the hour. Welcome to F.A.C.E. Hi, Bran. Roman, you look like a new name to me, too. Nice to meet you. Welcome to F.A.C.E. Glenn, Mike, Steve Volge's in the house. He's in the house every day handling the recording. Ryan's here. George, how are you? Patrick, Laura, Simon, how are you, buddy? Patrick. Okay. So before
Actually,
the
good morning,
number,
Coach.
hey, Blake, how are you?
Good. It's
Uh,
Friday. I mean,
yeah,
it's not a bad day. But no, actually, Steve is in the house because he actually wants to
talk.
talk a little bit about what happened with the yen yesterday.
Okay. All right.
Yeah.
Uh, I'd be happy to hand it over to him. Like I've said a million times, you could have these grinding up trends, and in a New York minute, everything can change. Play that song because that's how the markets are. The people that want to be there for the good times have to be there all the time. You turn your head and you miss a candle like this, okay? So I'll let Steve explain that. Just quickly, um, I wouldn't be surprised. We did trip this longer term trend line. I wouldn't be surprised to see some type of bounce like Mark Chandler was talking about. And, that's going to be a sell. It's a pretty negative week. Maybe we get like some type of ABC up to 480 or so. Maybe only test the trend line, the broken trend line. Here it is. So I think that's important. We saw no safe haven buying yesterday, and what a coinkadink. Blake was talking about a melt up. I said, well, why don't you just wait for a key reversal? And the trading gods heard us here in face and said, voila, there's your key reversal. Whether or not it turns out to be significant, was still came from a very high reading, and they don't all work. You had one here, you had more follow through in NVIDIA, but I think that there's some downside in here. The semiconductors also mimicked it by making a new high and then failing. Here's the semis. And to me, you don't always have to have three drives, but you have two pretty glaring divergence. And see, this was the last key. And what's interesting, and Blake said the other day that if you just shorted Nvidia and walked away for 6 months, you'd probably end up being happy. And we had a nice failing rally with an outside day from the 78.6 level that we brought up a few times here in the room. 110 looks to be very achievable, viable. And, if I was an NVIDIA bull, that's where I would try it. If it doesn't hold it, then we have a different picture across the board because that would open it up to much lower levels, like 75, which is a 50% haircut from where it was post split or even pre split. So, yeah, let's bring Steve in. Steve, you could have the charts and let's talk about the yen. My question to you on the yen is do you think it's it? Because I talked to an Elliottician yesterday who still thinks that we could get one more blast towards 64, that this is a four and there's a five to come. And it's all yours, buddy.
Hey Dale, good
Hey,
morning.
buddy. Good morning. Nice to hear
How
your
are you?
voice. Good, bro.
Nice to be here.
No, thanks for coming out from behind the curtain like the Wizard of Oz. You're like the Wizard of Oz. Ever see that movie? Huh?
Oh, I mean, I don't even remember how long ago that was.
Yeah. Well, the wizard, was just a guy, but he was behind the curtain. So anyway, tell us what you're seeing here.
We got this move yesterday.
Yeah.
I think it was a well-timed intervention, right? By well-timed, I mean, I think the BOJ knew exactly what they were doing. They wanted, first of all, central banks and governments know the data in advance, right? So what would be the ideal time for somebody to intervene? When you are actually pushing the market in the direction of a move that's already unfolding, right?
Yeah.
So I think that for them, the CPI data, which they definitely knew a little bit in advance, was the US CPI data was that data they needed to push the market even further against the dollar in the case of USD yen. This is not the first time we see the BOJ intervene. We saw that again happening in April, late April, right? And that is why I have kept advocating for quite some time that, you know, despite the USD yen being in a clear uptrend, a sequence of higher lows has been taking place here for a long, long time. It was a bad, it was a bad idea trying to follow this trend because it can keep working on in your favor, and then one day you wake up and the market might be, in a completely different place than where you left it.
Yeah.
Now, admittedly, it's not that yesterday's move was like super massive. It was a big move, right? There's no question about that. It could have been worse, right? And what I'm focusing at the moment is this confluence of the ascending channels, trend line support, and these previous highs that are now acting as support, right? Roughly at 158. So we find all these levels and the 50 daily moving average roughly at 158. Now, from a risk reward perspective, somebody that's really brave can be like, okay, you know something, I want to be long against that. But one thing is for sure, if we break through these levels, then technically the picture changes here. We have a technical breakdown, and then we are threatening with a much, much deeper pullback, in which case I would be looking towards 152. It was a level that we were testing for many, many days in a row. It was a multi-decade high that we were testing for several days in a row back in March until we finally managed to break it in April. So I think that's a natural area to act as a target if we manage to break through this channel. So this is what I'm looking at the moment. As I said, from a technical perspective, the risk reward favors longs here. I wouldn't be doing it. Right? Let me be very clear. There is no, we know that the BOJ is not happy with these levels for the yen, and who knows what they have, what they might have planned. This might be followed by another intervention any day now. So, because all in all, if you think about it, what did they manage to do with yesterday's move? They managed to erase something like 1 month of price action. But even if we go 1 month back, USD yen was still at extremely elevated levels. So if they actually mean business, if they actually want to move the needle here, they need to do more. We need to break through this channel. And then I think people that are long are going to start getting seriously worried.
Okay, nice analysis. And those levels you brought up were pretty key. That's that 152. You also have your 200-day coming in at the same point. So a lot of confluence there. I like it. I agree. The big question is, and like you said, you're not getting long here because there are some fib targets that it didn't get extensions.
I was very worried about the long side for a long time now, for a few months. I kept saying that, listen, I understand why somebody wants to be long, because this is an uptrend that has done nothing wrong, like a sequence of higher lows and higher highs. So that is the definition of an uptrend. But on the other hand, it's very dangerous going to bed, especially if you are in Europe, and knowing that during the times you're sleeping, something might happen from the BOJ and you might wake up and be very, very much out of the money, right?
Or your wife might smother you with a pillow. It's also a very dangerous time to do it. Steve, do you think that yields could also maybe play a role in this? This 420 level in the 10-year is very big to me. And if we start closing under 420, it measures pretty deep.
It's a good point you make, because I've been also mentioning yields to our audience in the Morning Edge, our subscriber webinar that follows F.A.C.E for quite some time, because yes, yields obviously do play a role, not exclusively, but they do play a role. And I've been saying for quite some time that I don't see the macro argument for higher yields, higher US yields, right? The path of least resistance is clearly lower, especially, we have a channel here as well, especially if we break through this channel, and if we break through 415, the path of least resistance, as I said, is lower from a macro perspective, but technically speaking as well, if we break through 415, we open a lot more downside. The counter argument is very weak, meaning we saw yields peak just above 5% when the market was very open to the possibility of seeing even higher rates from central banks. Now, we have accepted that higher rates are not coming, and the discussion, is just around
how much?
When are they cutting? How fast are they going to be tapering the quantitative tightening, right? So when the questions have to do with how fast we are going to be reversing to an easing cycle again, how exactly can you expect, especially because I've been saying especially that whenever we were having rebounds, right? So for example, the last rebound was almost at 4.5%. So, how can you make a good argument that there is a lot more upside from 4.5% when we peaked at 5%, with market expectations being a lot more hawkish than reality is at the moment, right?
Yeah, a lot of failing rallies on both short and long-term trends.
Yep.
Yeah. All right. Anything else you want to cover?
No, I mean, this was the focus of attention for today. I'm gonna leave some time because we have so many people that want to talk. So this is what I wanted to bring up today.
Okay.
Hey, Steve.
Great view.
I was going to say thanks for joining us.
My pleasure.
Sorry, Dale, didn't mean to interrupt there.
Okay, no, it's cool. Great to get it in. See, people know the nicknames I give people. Forex Gal calls them Mr. Confirmation. So anyway, what do you think about that key in NASDAQ yesterday? Will it be a correction for a little while, or is it,
are you
one
SME
day
coach?
wonder? Yeah, like, and then the explosion, everyone rotated into Russell.
Yeah, well, yes. So that's the issue, and that's I didn't want to interrupt you when you were talking about it. I see. I'm like you. I see the key reversals that you pointed
Blake,
out.
If I might throw, a point of view here, we saw the S&P reverse from the 161.8% extension. Yeah. We see the Nasdaq doing the exact same thing, confluencing with the ascending channel. So I've been saying for quite some time that these were the last levels that somebody could envision of producing resistance, because after that there were no levels to work with whatsoever, right? And when you only have like some exotic extension levels to work with, that doesn't mean much, right? So it's nice to see the market reverse from there. But before we start partying about it, I need to remind people that this might be the beginning of a nice pullback, but unless proven otherwise, these pullbacks are probably going to be bought sooner rather than later. So people need to have that in mind. I mean, I know that there are a lot of suppressed bears out there, but I don't see yet the thesis for a long-term reversal from here. Short-term, absolutely.
Right. And that's the exact point I want to make and I couldn't have articulated it better than that, Steve, is that you're right. We saw a big reversal where we needed to, and it makes sense. But the rotation that you're seeing in the market, what you're seeing happen in in the Russell 2000, even go look at the Nikkei. The Nikkei is on, and I just put it in the chat room literally this morning, here about 30 minutes ago. Let's go over to the S&P room. We are sitting literally on a knife edge here in the Nikkei. This is all rotation. So does that mean you could see a continued selling in the NASDAQ, and you could see a continued move? Oh, I want to talk about that here in a second too. You could see a continued move lower in the S&P near term, and the NASDAQ 100, and maybe a breakout in the Russell. You could, but that also means that you're probably going to get what Steve just said, buying on a dip next week, maybe today. You'll get money plowing right back into the other markets. So you have to be really careful. And that's the point I made yesterday in this tweet, right after, what was it, 21 hours ago. So in the morning, about, just a little while, 24 hours ago, basically, before you get too bearish equities, realize that this is rotation. This isn't like a bloodbath. And you would know it was a bloodbath. You know how you would know it was a bloodbath? You would have the dollar ripping balls today and yesterday, and gold and the bond market. Now, we could argue that the bond market, and I'll pull up the ZNs here. This is just from my Twitter timeline. You can see that the ZN, I think, is the biggest development that we had, and Dale just mentioned it. This is the biggest massive breakout you have to pay attention to. These are signs that we could potentially see a sell-off and a reversal as money flows out of equity markets and into maybe safe haven vehicles. But I think we're seeing the signs. I just don't know if I'd be waiting for Steve, more confirmation, right? And so I don't know that, and I'm sorry, I shouldn't even be on. I'm not on Twitter. I just wanted to pull those up because I had those charts from yesterday. But Dale, to answer your question, I'm like, I think it looks great. Like if you want to short, like your risk. The risk is at the top of the channel and the 161% extension, yesterday's highs. If you want to be short, this is the time to do it. Will you be wrong? You could be. And so I wouldn't be, leveraged up right now. But man, these are like this candle here. If we have a black or a bearish candle here, it's going to be dark cloud cover. And the weekly candle is going to end up looking pretty damn ugly if we have a down day today. Like if we sell off today, that's going to be an ugly gravestone doji potentially.
NASDAQ's weaker. NASDAQ's unchanged on the week while the S&Ps are still up, and it was a cleaner. See, so it's lower on the week. Red candle anyway.
Yeah, and it hit channel resistance to a T. In the 161% extension of as Steve just pointed out. So, I think that we have the makings of a reversal. I'd really like to see how the market responds to the producer prices today, and we do have University of Michigan consumer sentiment, and I think that you should, just be really careful, just plowing into shorts here. I had Ryan, I wanted to follow up on something you said yesterday. Ryan, you here?
Yep.
Hey, yesterday, you said something which did strike a nerve with me about blow off tops. Blow off tops are very irregular in the market. They're extremely irregular. Like we explained yesterday, I've probably seen in my visually, like, been in the midst of trading a half a dozen in 25 plus years. Unless you trade commodities, you might have traded a few more, because blow off tops tend to happen a little bit more in those little thinner markets in commodities than anything else. But you're like, oh yeah, well, you could have said there's a blow off top here, or a blow off top here, or there's a blow off top here. You said something like that. And the reason why I bring these up is because there are risks, and you get at that risk when you're at resistance levels. But yesterday could have secured the idea that maybe we won't get a blow off top. Maybe it's just a reversal from a key reversal area. But what do you have to say about where we reversed, and what are you thinking about as far as the price action that we saw yesterday?
Well, where do you want to start? If you're just talking stocks, yeah, we had a bit of an acceleration up. We had the data. We are seeing rotation. You know, we're just starting earnings season again. We've already had some banks out, and you've just seen the market pretty much do what, 70, 80 pips over higher over the CPI data. If you're long and you're coming into earnings season with a bit of risk, what are you going to do? You're going to take some risk off the table. And so I think that might be part of what we saw, this reversal in stocks. You've also got to remember that if you're looking at the Nikkei, if you've got people who are coming in, piling in because they can still get yen for cheap, and suddenly the BOJ and MOF are stepping in and smashing things around, again, you might see a bit of risk coming off the table there. But it doesn't matter. You know, the Nikkei is a key chart there. You've had a pullback, is on support. What does it do now? Does it break support, or does it bounce and then we go on to make a new high? And for something like the S&P, we've seen it time and time and time again. You get a big move up, you get a pullback, it sits down for a little bit, holds where it needs to, and then off it goes running again. Be that the next day, 2 days, a week's time. So, you know, no one knows the future. As I explained on the Flow Show, you look at the S&P, where did it pull back to? It pulled back to a very small point that it broke right there, right around that 50, was it 55, 85, 90 area. Pulled back just to that little bit of support, term resistance, and that's where it's held in the pullback. So that to me, well, I'll probably put the line, there. So that to me says this is a pullback. It's not the market suddenly throwing its toys out the pram. That doesn't happen until we're under 5,500, in my opinion, and then down testing that 54.40 you've got there.
Oh, there's so many support levels that we'd have to break on the way down.
Exactly,
right?
Exactly, and that's what I meant by yesterday. You know, you look at the shape, the size of that low high yesterday, and you go back, and that's small beans compared to some of the ones we've seen, where it's broken higher and higher. You go back to May, look at the May time where we had a top, pulled back to your trend line, and then it went off and running again.
Yeah.
So, you know, it's all about context. You know, you look at that in a 15-minute chart, it looks big. You look at it in this context, it doesn't look big. So just go by the price action, see what the market wants to do. Back below 55.90s, yeah, maybe something's happening, but it's still got an awful lot to
110 the video be the key for the whole market. It's got to hold 110.
It's the boob top, Dale. Dale,
huh?
it's the boob. It's the boob top. It's the boob top. It's the video's topped. It's done. Stick a fork in it. I'm joking.
No, I you know, it's possible 110 will seal it if it takes it out.
Well, I'm not joking about it that it's topped. I'm joking about it's the boob top. The boob top.
I got it. All
right. But yeah, I mean, we were Tulin in our chat room, we were talking about the NVIDIA before it reversed, because it was developed in this Gartley pattern, and I'm like, hey, this is the level. If it's going to make a lower high, it's going to do it right here, and obviously it did. So, but that looks pretty gnarly. Hey, speaking of which, I want to say something about a development here. I'm going to give you guys more information later. Ryan, you here, right?
Yep, today.
Ryan and I were talking yesterday to a trading group, a big trading group out of New York, and we've got an opportunity for you guys here that live in the United States, that are really think you've got this trading thing down. and you want to enter a competition that has significant cash money prizes, it would be free to enter, and it's going to be free to apply. But just because you apply doesn't mean you're going to be selected. But it's only for traders in the United States for now, for the first time around. And we're going to talk a lot about that on August 1st. I'll be giving you more information between now and then, but I just want to let you know, Ryan and I got to meet with a group. I've been in conversations with them for the last couple of weeks. It's going to be a huge opportunity for those of you that live in the United States. This is a potentially an opportunity where, and it doesn't cost you anything. You just have to be selected. This would be an opportunity where you could potentially make, 7 figures if you're good enough in the future. And it's an opportunity that not many people will ever get. So, I hope you guys are excited about that. Ryan, I didn't want to mention too much, but do you have anything else you wanted to throw in there regarding our?
Well, don't want to give away too many spoilers this early, but this is more than just a prop competition or a TFP assessment. This is potentially career changing, and that's all I'm going to say on the matter.
Yeah, and you guys know I traded for I traded for Gellos Capital for 2.5 years, and before then 2.5 years for another company out of Florida, and would travel to and from Florida and New York City multiple times a year. Did that for about 5 years, and it's this very similar type of situation. So I hope you guys are gonna stick around. Make sure you're here every day, because every day I'll be trickling out some information. We're just trying to get everything handled with their compliance department, yada yada yada. So
just to put off, because we're already getting questions. Is this available in Europe and whatever? Not initially. It may be something that happens in the future, but just initially, it's just for the US.
Yep. So anyway, it's gonna pretty exciting stuff for you guys. Something we've been working on, and I'm really excited to be able to bring it to you. Anyway, I see that Grega is here, and we have PPI coming out. Grega, did you want to say, as I set everything up? Sorry, I didn't mean to take up all this time, but it was a really exciting news. Do you have anything you want to say about yesterday's price action? I can't show your charts because I got to get ready for this. But go ahead, Greg.
Hey.
Good morning.
Well, actually, I just think that maybe just one day of a sell-off on stock market is not enough to call it a reversal. But if today we will continue to see more downside pressure or just keep moving sideways at current minor range, then I just think that Monday and Tuesday we can certainly expect more weakness. And at the same time, on dollar index, as a shared
let me pull up the dollar index. This is your dollar index chart, so let's pull it up. Here we go. There you go.
So we are now holding this support still around 104. Maybe we'll get a spike to the downside, but this drop from 106, in my opinion, is coming into some late stages. So at some point, I'm expecting a free wave correction, and if stocks will remain weak today, I think that we are going to stay sideways here on the dollar and even retest higher prices around 105.
Yeah,
that's still sell or rally.
You still want to sell a rally. Okay.
Yeah.
Thank you, Grega. I appreciate it. And like I said, I'm sorry I saw you here. I had to mention that news about this trading competition that's going to be coming up. It doesn't happen until September, but registration is going to open in August. So sorry, but this is great information. How do you feel about what's happening in yields, or actually in the 10-year? And maybe you can say it as we just pull up the chart. I don't want to pull up the charts. You see what's happening in the 10-year.
And yourself as well, as you discussed earlier, I think that the yields are headed for more weakness. Even if we get some kind of a rebound or just stabilize a bit, if stocks will come to the downside, this would be just temporary, in my opinion. And through summer, trading conditions can be a bit tricky. So maybe it's now a period of consolidation that we will go through in the next few weeks.
All right. Thanks, Greg. I really appreciate it. I wanted to talk about the positioning. It's so poor there, but we got just a couple of seconds. Here we go.
Yen's getting jumpy. Head of the data.
Whoa. Wow.
Hot.
hot, 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 hot. Look at the year over year. Look at that month over month. Wow. And stocks did not like that initially, but they're buyers are stepping right back in. What are you going to do with that data? I feel like the FX market just did a move, but
That's a kick in the
Buy
nuts.
this break in bonds and notes.
yeah, I mean, maybe you do. Maybe use this as an opportunity to,
And
take money.
be patient for Grego's area to be a seller of the dollar up around 105. You have some charts up there that show that level, Blake, that red moving average.
Yeah,
Yeah.
here let's pull it up. Yeah, you have a guest coming in, right, Dale? I don't want to take up too much
Bob's
time,
here.
but okay, Bob. Okay, 1 second. Let's pull up the dollar. Ooh, it's down here. Here you go.
Yeah, you're gonna get a little ABC back to the trend line.
Yeah, I mean, maybe I think this is by the way, this is the range. If you read you read the analysis here on ForexAnalytix, I believe that's the range that we are dealing with. You can just see, 104, 104, 200 DMA, that's just you got to deal with this range right now, and you have this previous support's going to act as current resistance.
And you have to admit, yesterday during the tech sell-off, there was no, safety buying in the dollar.
No, that's the thing. That's why I
See,
said
it's
it's
going to be different
rotation.
this time.
Yeah, if you see the dollar come out of its shoes, then you go, oh shit, I need to sell stocks. Like that's the kind of the linchpin right there. And if you're not seeing it, then you got to be like, well, maybe.
I don't think there's going to be a lot of safe haven buying when and if we break in NASDAQ. NASDAQ, and people are rationalizing, and I'll bring Bob in, that we're going to have rotation. What took us up here was tech. So if we have a bear market in tech 20%, I mean, you've had it in NVIDIA at 110, it's 30%. So if the Mag 7, they're rotating out of it and it's weak, a rally in the Russell is not going to compensate for what happens to the averages. And
Yeah.
I rest my case. A rally in Russell, it might be nice if you're long Russell, but I don't think it's going to help you if you're long averages.
No, but if you've been plowed into some ETFs in your retirement account, you're probably, for some reason, you're going, wow, they look a little bit better right now, and I don't understand. So it's because it's not so centralized in a couple of names. Anyway, I know you have your guest here. I just want to say, guys, gals, thanks for a great week. Thanks for being here this week. Make sure you're here daily, as I can give you more information on this trading competition coming up in the next couple months. I am interviewing the guys here on August 1st. So it's a Thursday. We decided we didn't want to do it on NFP because these guys trade quite a bit. They have physical locations in Amsterdam, Chicago, and New York City in the city. They are a big group, much bigger than the group that I used to trade for, and they're the real deal. So I'll let you guys go. And Ryan, thank you so much for taking us through the flow show today. I know K-Man was out, so thank you all week. It's been awesome to have you here. And it's great to have Steve here today. And Greg, thanks for stepping in today and giving us your quick thoughts, even though they were quick. And everybody else, make sure you're sticking around with Dale and Bob, and also make sure you check out the Trader Funding Program. In the meantime, especially for those of you that are outside of the U.S., remember, if you take a Trader Funding Program assessment this month of July, you'll get a one-on-one session with me. We'll talk through specifics on what tools you have available to you through the ForexAnalytix community. But more importantly, I'll be giving you some tips and tricks and ideas on how I passed assessments myself. So make sure you're checking it out for this month. All right, Dale, it's all yours, and thank you so much for guiding us every day and all week long. And even as you were sick, you were still here. So thank you.
Oh, Yeah, well, this is what I do. And I want
The
to
show
thank,
must go on.
yeah, and thank you, Dream Team, for another great week. Okay, really nice week. A lot of great ideas flowed through here this week. I can't think of any real big bloopers we made. So, and I can't think of some real nice ideas that manifested. So that's what we do. That's the Dream Team. And now I get to talk to a guy who made really a nice strategic move in his gold and silver portfolio and his physical portfolio. Bob Coleman, welcome back to F.A.C.E. How are you, buddy?
Good, Dale. How you doing?
Good. So I'm going to tell people what you did, and I'm pretty sure I know the area that you did it. And it was when you made a major shift in your holdings from heavier gold to heavier silver. And it was before this breakdown and this tremendous leg down. So that must have been a real boon to performance that you did this. Why don't you
Yeah,
tell us why you made that decision up here?
well, I was already about about 72% silver, 28% gold in my fund. And I run about close to $100 million. So what I ended up doing was basically selling more gold and adding more silver, because that formation that we kind of saw back in February, March, April, that the declining, I guess, lower highs, I guess you could say, but that relative strength that was also kind of coinciding was kind of a signal that yeah, every time it just rallied up on that gold silver ratio, that relative strength just continued to kind of it, it just was dying, I guess you could say. So what wasn't really it, you could see, I guess, maybe with also the fundamentals that I kind of watch and some of the market dynamics and some of the activity that we were seeing, is that, you know, silver tends to kind of take the handoff almost. Gold tends to lead the charge, and then silver kind of plays catch up. And at that point, you know, when you look at the mining, the production cost for silver, which was around, I think it was around $23 an ounce or so, you know, you're scraping along the bottom at that point. So it was just a matter of time before, if the market did catch a bid, you'd see some rotation into silver.
Okay. We're seeing that reverse a little bit here. But it looks to me like we could get maybe a bit more of a recovery, maybe back to 82, but I wouldn't want to see it get back over 84. So yeah, it's very possible you get an A, B, C, and then it rolls over again. That coincides with maybe some type of bounce in the dollar, but the dollar looks pretty vulnerable. And one thing I was taught, and it's silver has been performing before it, but silver usually needs a bear market in the dollar to perform. Gold doesn't always need a bear market. But even if we bounce a little bit, the dollar's breaking down. It took this line out, took this line out. You know, trend line's destiny is to be broken, and they have fulfilled their destiny. So I'm looking for a much lower dollar for many weeks to come. That should really be a tailwind for precious metals, don't you think?
Yeah, and I think if you look at, you know, everyone says, well, what could be the reason? Is it fundamental? Is it more just on a trading level? But I think if you look at the election and you look at sort of the power shift that happened, maybe, you know, when Obama came into office about 15, 20 years ago, I guess, getting old. It the makeup of the markets, the makeup of, you know, the power, the elite, the control, the donations, the lobbyists, all that kind of stuff. The way the market was built, the way that the political structure was built, you could be seeing this, you know, with Biden sort of in the Democratic Party sort of in shatters a little bit here. And I'm not trying to be political. Either way, it doesn't matter to me, but I'm just trying to make observations. You could be seeing if the Democrats do lose the election in the fall, you could be seeing an unwind of a lot of this power structure and what was, what the tech and all that kind of stuff that was built up over the last 15, 20 years with influence and that type of thing start to unwind. And that could be a reason for the dollar ultimately sinking lower, is that it's part of this complete unwind. And like you were saying, your outlook on technology and a correction or potential bear market setting in, that could be part of this whole grander, I guess, macro theme, I guess you could say, as a shift or a change from leadership over the last 15, 20 years.
Okay. So political shift equals unwind of what we've been used to for decades now. Okay.
Yeah,
go ahead.
No, and that's sort of, I put a chart up. I think Bank of America put it up. They did
You want to share it?
It was a tweet that I put out a long time ago. It just came to mind. I apologize. I'd have to try and see if I could find it.
Okay.
But basically, it looked at technology relative to the commodity sector, and you were basically right at a point where we were in 99, 2000, when tech was in that major bubble, and so. Yeah. And so tech obviously was vastly overbought. Commodities were vastly oversold. And so relative strength wise or relative value wise, it made a lot of sense to go into commodities. And that would portray your call on the dollar as well. If the dollar is going to see weakness, that should help commodities across the board. And in reality, I think the dollar is still the almost like the pressure valve, almost, where the dollar has to go down in order for them to maintain any type of high asset prices. I mean, this is all about, I think, someone said it best, the lower Biden's poll ratings go, the higher the S&P has to go, almost, because they're trying to create this wealth effect. People vote with their pocketbook, so to speak. And I think, again, it all goes to this, not to be political and that type of thing, but there's election years can be,
Okay,
very.
I tell you what, because you said political twice. I'm a betting guy, but I'm thinking a guy who's in the precious metal business that has safes to store metals for people, that lives in Idaho, is not a bleeding heart liberal. Is that a good guess?
Yeah,
I'm just using a little bit of evidence of things I know that you're not real left wing.
Yeah, the industry and obviously the sort of the political sort of culture is more conservative. Yeah, but what I'm kind of like, I've been in the financial business since early 90s, and kind of like with you, I watch the markets and I try to remove the emotion as much as I can, and the biases. But just looking at it from an outsider's perspective, you're always trying to make sense. I mean, it seems like the charts kind of tell the story, but then the fundamentals play out, and that ends up being what's on the front page. And that's what we're all trying to look for that reason, but it's one of the things I love about watching your program is that you're watching the technicals and you're seeing this stuff kind of play out and form. And a lot of investors don't look at that. They just look at headlines or mainstream media news or alt news, that type of thing.
People who buy headlines today sell newspapers tomorrow. Now, so unless you want a paper route, learn to fade that action.
Right.
Anyway, it's like buy the rumor, sell the fact. But yeah, headlines, don't trade off of headlines for more than 5 minutes. So it's been in the physical market, a huge range in gold. I mean, since April, right? And we're still in this range. And I know a lot of people are saying, 2,700. It's definitely given you chances to buy it, especially. I want to know what you think about this. So 2 months in a row, And I think this was the first month, this big down day. China comes out and says they didn't buy gold that month. Okay. I didn't know until a few days later, but Monday was the same thing. There was a second month in a row that they publicized. Okay. They're publicizing what they're not doing or doing. I think the Chinese do that to be able to create a little bit of an air pocket so they could buy. I don't think they're, just trying to be transparent to give anyone else an edge. So you have to learn that when China says they're not buying something, they're trying to get it cheaper. And when they're talking about that they're, selling something, it means that, they want lower prices. And if they say they're not going to buy, it's because they know they could get lower prices. So they use the markets to distribute and accumulate. So just pay attention to that. Who knows if they bought that dip after the announcement. So I find that interesting, that kind of jawboning by China, one of the biggest gold buyers for the last few years, is announcing to the world that they're not buying gold. Are they worried about people losing money being long? I don't think so.
No. Yeah, at that level, that's beyond my pay grade.
I mean, you heard the news, right? When you heard
Yeah.
that, I mean, a lot of people panicked. Oh, God, they didn't say they're selling their gold, but they're not
Right.
buying. What do you think of this price action? Are we going to get something like this in silver, where we still pull back to 28 one more time, or this just another one of those days, and we start turning up Monday? Do you think that the silver, and maybe that's what the gold silver ratio is saying, that if we're going to have a correction in tech and the market, 5-10%, that silver is going to underperform during a pullback, say in NASDAQ? Silver would underperform.
It could. I mean, I've seen some weird stuff the last few years in this market where the stock market takes a massive dive, and the only two assets that are up that day is gold and silver.
Okay.
Yeah, and so going into this election, I think this uncertainty, I don't know, and especially if you're right on the dollar, I don't know if silver is just gonna roll over and play dead with the stock market if the market does sell off, ahead of the election. But one thing I was going to do, I put a chart out on Twitter the other day on GLD, and then relative to the gold volatility index. And maybe that may help a little bit. I don't know if I could share that with you.
Yeah, let me know. I'll stop sharing and you could take over.
Okay, yeah, I could share. Make sure I got this. Let me pull. See, I guess gotta find. I got so many windows open. Okay, there we go.
Okay. So volatility peaked at the high, and it's trying to come back. I like that chart. So
Yeah,
volatility would have to they should go together, right? Higher volatility happens with higher prices, mainly.
Yeah, that would be the idea behind it is, looking at early February, or January, February, you saw vol just kind of tanking, and talking to players in the industry, a lot of the trading desks were going long vol as a potential trade. The industry itself, the physical metals business, is very quiet right now. It gets typically quiet during the summer months, but this is like dead, especially compared to what activity has been the last 3 years. And so you have a lot of players that are holding a lot of inventory, and they're hedging that inventory with futures contracts, obviously to protect against price movements or price risk. But what's happening is, at the same time, you have carrying costs or financing costs rising, because as the industry has been slowing down, and you've been seeing, you see it in the premiums on physical metal products, the bids on like 100-ounce bars and coins and rounds and things like that are just, they're falling. They're going to bigger discounts on the wholesale level, bigger discounts on the retail level. Well, banks, if you're financing your inventory, banks are watching all this stuff. They don't just simply, dole out credit with no understanding of the market. So they may be either increasing potentially the lines of credit, the cost of the lines of credit, or they could be reducing the line of credit itself to these dealers that are taking on too much inventory. And that potentially creates an issue. Well, if they're reducing inventory, they have
want
to buy
get
back
it out the door.
Yeah. And so they may be buying back futures contracts if and unwinding that hedge. That could be one thing. But this kind of environment, if it stays like this, could be very, deadly for dealers that were basing their entire business on volume. You see a lot of it with the internet, for example. These organizations that have really done very well, the last 4 years or so, and then all of a sudden, when things slow down, they're not moving product, and all of a sudden, they're spending a lot of money advertising on the web and so forth, and trying to bring more people in. But what you're seeing is selling coming back into the market, which has been a dominant theme since really the beginning of the year. Is the retail guy is not engaging in this market. They're selling into the rallies, and they continue
you brought
to do.
that up when silver was a lot lower, and you construed it as bullish. You said it's dead, the public's out, they don't believe in it anymore, and then we rallied $5-10. Remember?
I know. I wrote an article in December saying this is the risks that we see. I mean, to the industry, and it's all coming to fruition. The issue is people don't want to chase at this point. They're like, oh my God, that silver's in the 30s now. I can't buy it here. I'm used to the cartel smashing it back down to 22. And that mindset, the industry got people so worked up on this idea of complete manipulation by the banks that they're not engaging anymore. They're not willing to buy the market. Either that, or they're going into mining stocks. But
how about this, Bob? They're spending it on rent and medicine and gasoline, and that there's not as much disposable income as there have been from at least a sector of your precious metal buyer.
Yes, you're absolutely right.
They're not all the super rich that just buy it. I mean, a lot of people that are worried about the future are people that are just getting by, and they may have had an extra 10K last year, and they don't have it now, as their cost of living and the debt they've already taken on doesn't give them buying power.
You're absolutely right, and I talked about this
like
last year.
A recession's coming.
Yeah, as metals become a source of funds, rather than a quasi alternative money market account, because basically that's what was happening in 2020, 2021, when interest rates were zero. People were saying, well, metals don't look too bad because I'm not getting anything in the CDs or T-bills or anything like that. So you didn't have much competition.
There's that competition now too. That's true.
Yes.
Yeah.
And that's what's interesting though is, if you look at the industry usage of solar, has been growing. I think accelerating faster than I think most expected, and I think that's the industry demand is really what's kept the silver price very strong, and had a bid to it, which is not something I think we've seen, especially the last few years, where either the futures markets or the derivatives markets dominate price action. Now you're seeing industry say, listen, I need it, I got to pay for it, whatever the price is, I got to buy it at. And I think you're seeing, if we're right with the outlook that many have, is supply deficits, that type of thing, production not really rising at all. In fact, it's been stagnant. If you continue to see the supply deficits, the metal that's going to meet industry demand is going to be metal that's above ground, the metal that you and I have, and what price are we willing to sell it at becomes a determining factor rather than production costs of a traditional mine. And I think that's where we're headed, I think, in this market.
Okay, you know, with the dealers being under pressure, and the summer traditionally is a slower season for almost every market. I just want to let people know that I have experience of having purchased precious metals through Bob. It was efficient, and the turnaround was good, and Bob took care of me. So if people want to take advantage of this quiet market and silver down $1 today and want to do some stacking, what's the best way for them to reach you, Bob?
Yeah, they could either go to the website, goldsilvervault.com, or just give me a call. Our number's right on there too. So that's the easiest way is just give me a call. I'm very old fashioned, so I do everything over the phone, so to speak. Even though we've been trying to get a website going for order entry, I'm not a tech guy, so I couldn't tell you why, but it just seems like it's like trying to part the Red Sea sometimes.
Okay, so it's old school, and you'll actually get to talk to Bob. So
yeah,
why don't you put it in the text, your website address, and appreciate being able to talk to you, Bob, and hope you have a good summer. You know, when it's slow, go fishing.
Yeah,
And
definitely. I appreciate it. Yeah, I love watching your program and your comments out there. It's been, I think for a lot of people, if they just want to get a perspective on not necessarily trading if they're not really traders, but at least a perspective on market action, and try to see what the market's actually doing versus just reading a lot of the problem in our industry. A lot of promoters and gold dealers just they kind of repeat the same mantra over and over, and it doesn't really give people a lot of sort of depth to the market. And it's nice to especially you've been in the business for a long time, so you can give a little bit more, I guess, definition to what this, what the price action may be doing or what to expect. And I think that may help people guide them through this volatility.
Okay, Bob, well, I'm willing to be your in-house technician. Shoot you some stuff, and I appreciate that you brought it up, and we'll be talking in the fall from the elections, and I just want to let people know that I've had personal experience with Bob, and I don't think you're going to get hurt. When you're stacking silver, it doesn't matter if you pay 28 or 29, right? There it is. So there's Bob's number, and have a great summer, buddy.
Definitely, you too.
What's the temperature like up there where you live?
I think we're getting belted with some heat. It's like 107, I think, right now.
Oh my God. Yeah, it's what I'm going through. So no reason to go see you.
Yeah. And the funny thing is our housing market, I think prices in California now are cheaper than here in Idaho.
Yeah, it's because all the Californians moved there. They did. Anyway, I thought that maybe can you go up to the mountains and get away from it?
You can, but there's a fire watches and that type of thing that you got to be really careful of. This heat really dries things out, so you tend to, and you're seeing the smoke and a lot of the fires that's starting to develop. So you got to be kind of careful when going up into the mountains.
Don't leave your precious metals out in the sun and then try and pick it up.
Especially silver.
Later. Yeah, silver conducts pretty good. I don't want anyone to burn their fingers with their stack. So keep it in a vault or a coffee can buried in the ground. And Bob does have vaults where you could store.
Yes.
And something else to consider if you've ever been robbed. It's not fun. So that's it for me, buddy. Have a great weekend, Bob.
You too.
Appreciate it. I'll get a hold of you and we'll set a date sometime in October.
Sounds good.
All right, Bob.
Okay,
Adios.
thanks.
All right, everyone. Have a great weekend. Okay, you too, Marcus, Patrick, enjoy, George. David, what's that article about? Is there really a big shortage? I didn't click the link. Hit me up on Twitter. Send it to me on Twitter. All right, here, I'll click it. I don't know if it'll affect me being able to. And guys, David Jensen writes some good stuff. You ought to follow him. I don't know if he's on Twitter anymore, but he's very aware. I think he's the first one to report about that China was out of the market for a while. A note. Okay. This article by David, got it now. You guys could probably see it. All right. I'll check it out. Thanks, David. Check out David Jensen. Anyway, just trying to, give you guys insights from different sources so that you can make up your own mind. Keep an open mind. It'll keep your account open. Adios, everyone. You're welcome, Tom.